I'm Jennifer Beeston, and today I'm introducing you to Mortgage Expert on a Sofa in workout clothes, aspirational workout clothes. Basically, this is called, I want to talk to you about rates, but I didn't really want to get dressed. So let's go with this, okay? Rates, oh my God. The last month, really, it's been a whirlwind. I've had a lot of Chardonnay. If I could turn this camera around, you would see 2 cases of Williams Sellium Chardonnay just waiting for me. It's been brutal, but it's coming back. So here's what happened. About a month and a half ago, rates almost overnight went from like 4% to 4.5%. And in certain circumstances, it was like 5%. And this was all within a very short period of time. So people who were shopping or getting ready to refinance, all of a sudden it was like, whoa, you missed your moment, it's gone. And what had happened is basically you had this perfect storm of fears of inflation. What will the Fed do? The economy looks great, better bring those rates up. It was a whole bucket of hell, as I call it, a hell bucket. And that's what spiked the rates up. So we have seen a little bit easing off since then, but what you need to know is this is a warning, okay? We've all been in this la-la land where rates are really low for probably, gosh, the last 9 years? I mean, is that even right? I mean, it's been a long time that rates have been low, and that's gonna change. So as our economy recovers, as the housing market keeps on continuing to grow and get stronger, rates are gonna go up. So a couple things you need to know as someone who may own a home or is buying a home. Number one, if you own a home, you're gonna wanna consider getting a mortgage checkup. So if this is a house that you wanna keep for a long time, you're gonna wanna make sure that you're in the best loan product, because if you're like, I'll deal with it next year, rates could be 1% higher next year. It's gonna suck to deal with it next year if rates are 1% higher. So you're gonna wanna do that now. Now, if you're looking at buying a home, there's 2 things you need to do. Number one, you need to check in with your lender and make sure that you're still qualified with the slightly higher rates. And what I always do with my clients is I do worst case. So when I'm qualifying someone, I'm not necessarily using today's rates. I'm usually going 0.5% higher just in case. And I tell them this, it's not like a surprise. I'm like, hey, I'm going 0.5% higher. Let's play the worst case scenario game. And the reason you want to approach loans this way and buying a house this way yourself is you don't want the rate to go up a little bit and then your dream home's gone. So if you're qualified, check in with your lender. If you're thinking of getting qualified, call me clearly. But if not, make sure they're doing a worst case scenario with you so you don't end up in that pickle. So the other thing, if you're buying a house that you want to consider, or if you're thinking of buying a house, sooner rather than later is gonna be your friend. So if you're like, well, we just need to save some more to get to 20%, I would say figure out what you qualify for right now based off of what you have saved. Because a year from now or 6 months from now, the difference, the benefit that you would have gotten by saving that 20%, if rates are going up, it could be gone. And with the way housing prices are going, at least in California, they're just climbing every single day. Like it's crazy. So you want to make sure that you keep that in mind. Get qualified with what you have in your bank account now, so at least you have that option. You don't have to do it. You don't have to necessarily buy before 20%, but at least know what your options are. Lenders don't charge you for pre-approvals, and information is free. So at least with me, if I'm looking at buying something or anything else, I get as many options and as much information as I can so that I can make the best decision. And that's what I would suggest for you as well. There's jumbo products up to $3 million with 10% down, conventional loans, 3% down, VA, USDA, FHA. I mean, there's such an array of loan options in today's market that are good loan options. These aren't like predatory, scary things where it's like a 3-year ARM that has a $200,000 prepayment penalty on year 6 with a 12% balloon payment, like whatever. It's nothing like that. These are good loans. So that's what I would suggest doing. And if you're sitting there right now watching this going, God, she's wearing workout wear, like that's embarrassing. But you're also going, I think we're priced out now. That's a terrible attitude. You're probably not priced out because, you know, if rates go up 0.25%, it doesn't really necessarily change the world. It changes your payment by generally under $100 a month, depending on the price point you're in, okay? So don't get defeated, just take a deep breath. We can do it together. It would probably be good for me. Let's try. Have a glass of Chardonnay and it'll be fine. Rates will be fine, okay? So I hope this helps, and I hope that you get a mortgage checkup or you at least know what you're qualified for so that the market doesn't pass you by. Thanks.